All right, so you ready to dive in? Today we're going deep on IndusInd Bank, their second quarter results for fiscal year 2025.
Looking forward to it.
You sent over a ton of info, financial reports, investor presentations, all that.
Yeah, the whole shebang.
We've got, on one hand, all these numbers, right?
Right.
And then there's those kind of marketing highlights.
The glossy stuff.
Exactly. Our job today, figure out what actually matters. What's the real story here about where IndusInd Bank stands now and looking ahead?
I'm all about unpacking that. A company's financials, they can tell you so much about their strategy and what they're aiming for.
Totally. So to get us started, the investor presentation, it paints IndusInd as a major player in the Indian banking world, right?
Mm-hmm.
They're the fifth biggest private bank in the whole country.
Not messing around.
No kidding.
Yeah.
And their network is massive, over 7,000 branches and outlets, especially in those rural areas.
Interesting.
And one thing that caught my eye, they're really emphasizing livelihood loans, especially for vehicle financing and microfinance.
Mm-hmm. Makes sense, right? They're trying to reach a whole bunch of different customers. You've got folks needing those microloans, and you got businesses looking for the whole corporate banking experience.
It's a wide range.
Definitely casting a wide net.
And they're not ignoring the tech side either.
Yeah.
They're bragging about, get this, a 93% digital transaction mix.
Wow.
Yeah. So to me, that's saying, hey, we're serious about this digital stuff.
Yeah.
Got to adapt to how banking's changing.
It's the name of the game now, for sure. Especially if you want those younger customers who live on their phones,
Absolutely. So for anyone listening, that's kind of the setup, right? IndusInd Bank, big player in India, reaches everywhere, all sorts of customers, and they're doing both, like the traditional and the digital banking thing.
Solid overview.
All right, but now let's get into the numbers themselves. I'm ready to see what's what.
Me too. Let's hit those highlights and see what they tell us.
Okay, first off, some good news, okay? Both the investor presentation and the financial reports are showing that loans and deposits are up compared to last year, year over year. So more loans, that means they're lending more, right?
Yeah.
More deposits, people are putting their money there.
Yeah, those are good signs usually. Means there's business happening, people want to borrow, people trust the bank with their savings. That's how a bank grows, basically.
Makes sense. What I thought was interesting was that retail deposits are increasing.
Yeah, that one's important. Shows they're building a solid customer base, people trusting them with their everyday money, not just big institutions or whatever.
And their capital adequacy ratio, it's sitting at a healthy 16.51%, which is way above what's required.
Yes, capital adequacy. That's a big one. Shows the bank's ready to handle losses if they happen. Higher that ratio is, the stronger they are financially.
Right, makes sense. And then their non-performing assets, those NPAs, those are down.
Oh, so less of those loans are going bad, huh?
That's my understanding, yeah.
Yeah.
Seems like they're doing better at managing risk.
So far, so good, right?
I'm thinking so, yeah. But there's got to be a but coming.
Well, it wouldn't be a financial report without a little bit of not so great news, right?
Lay it on me. What'd you find?
So even though we got those good signs on the loans and deposits, asset quality, all that, their net interest income, that's dipped a bit compared to last quarter.
Oh.
And other income, same deal, dipped a bit. But here's the thing that really stands out. Their net profit, it's down significantly compared to both last year and the previous quarter.
Whoa, hold on. That's a pretty big deal, right?
Uh,
How do we square that with all the good stuff we just talked about?
yeah, it's what's the real story here? Luckily, the investor presentation, it actually gives us some clues. They're intentionally building up these things called contingent provisions.
Contingent provisions. Remind me what those are again.
Basically, it's like a safety net, financially speaking. It's money they set aside just in case there are losses down the line.
Ah, yeah.
So by building that up, IndusInd is kind of saying, hey, things might get rough, so we're getting ready.
Playing it safe?
Yeah, being proactive, especially with how the whole economy is looking.
So they're taking a hit on profits now to build a stronger foundation for later.
That's a good way to put it. And remember, we got to look at the big picture. What are other banks in India doing? What's happening with the global economy? All that stuff matters.
Right, it's all connected.
Exactly. So a drop in profit, it doesn't automatically mean they're doing bad. It could just be them making a smart move for the long haul.
Okay, that makes sense. That's reassuring. But, we've just scratched the surface here. We've got the top level stuff, but there's always more to the story.
Oh, absolutely. And that's where things get really interesting, when we start digging into the specifics.
All right, well, lead the way. What did you find? What caught your eye?
Well, their loan portfolio, when you really get into the details, there's some stuff in there that tells us a lot more about their strategy, like how they're positioning themselves in the market.
Okay, I'm intrigued. What kind of details?
It's pretty remarkable, their digital transformation. They're not
Hmm.
just like adding new stuff, it's more like changing how the whole bank works, how they connect with customers.
Yeah, it's almost like they're bridging the gap,
Yeah.
right? Between that traditional way of banking and this whole digital world.
Right.
On one side, you have those, what was it, 13 million microfinance customers, lots of them in rural areas. And on the other, they're trying to attract those tech-savvy folks with their mobile apps and all that, winning awards too.
It's a tough balancing act for sure, but they seem to be pulling it off. Their strategy, it's like they're trying to appeal to everyone, you know? Different needs, different ways people like to bank.
Speaking of different needs, what about their other areas, like business banking, lending? The report shows some decent growth year over year in those areas, the business banking, credit cards, loans against property, all that. Does that tell us they're feeling good about the overall economy?
Well, it could suggest that, yeah, when businesses and people are borrowing, investing, that's usually a good sign. But, we can't just look at those numbers by themselves. We always got to think about what's happening in the bigger picture.
Right, of course. All those factors, inflation,
Yeah.
interest rates, how the global economy is doing.
Exactly. And that brings us back to those contingent provisions we talked about. Remember those?
Yeah, the safety net.
Yep. They give IndusInd some breathing room. If the economy takes a hit, they've got that buffer.
It's like a cushion for the whole bank. Which reminds me, we got to talk more about their capital adequacy ratio. It's consistently strong, even with them giving out more and more loans. How do they manage that?
Well, remember how they focus on those higher-rated corporate customers? That definitely helps. Lending to those less risky borrowers means they don't have to keep as much capital on the sidelines, just in case. And having all those different products, that helps too. They're not putting all their eggs in one basket, so to speak.
It's all about diversification and making smart choices about who to lend to, right?
Absolutely. And they're also all about efficiency, constantly looking for ways to streamline their operations, make sure that capital is working for them. That's how they can keep growing and still maintain that strong capital position.
So we've covered capital adequacy, but what about their funding? Where's the money coming from? We know they've got a good chunk of those low-cost deposits, especially from everyday customers, but how are they balancing that out with other funding sources?
If you look at their borrowing, you'll see a good amount comes from long-term sources like development finance institutions and foreign currency borrowings. That way they can lock in decent rates and don't have to worry as much about short-term swings in the market.
So it's a mix, right? Not
Yeah.
just relying on those daily deposits. Thinking ahead.
Exactly.
Right.
Strategic, right. And their credit ratings, those being strong, that helps a lot. Good ratings open doors to better funding options. It's a cycle. Good performance leads to good ratings, which leads to better funding, and so on.
It's all connected, just like you said earlier. Okay, but let's switch gears a bit and really dig into this digital transformation they're doing. It's not just about slapping a new app on people's phones, is it?
Nope, it's way deeper than that. It's about making everything smoother, using data to make smarter choices, and giving customers a seamless experience, making it feel personalized.
And their recent launches, they really show that they've moved huge chunks of their personal loans and credit card stuff online, the whole process. They're even using like AI algorithms to check out loan applications right away.
That's cutting edge stuff right there. They're using tech to boost efficiency and reach those new customers. And it's not just for individuals either. They've revamped their platform for small businesses, making it way easier for them to get the credit they need.
And what about that new investment platform? That seems like a big deal. Making investing something everyone can understand and do, not just the pros.
That one really impressed me, especially how they're focusing on personalization, creating investment plans that fit each person, figuring out their risk tolerance, using tech to cater to individual needs instead of that one-size-fits-all approach.
It's all about using data and tech to create a better experience for the customer. And the numbers show it's working. Their digital assets balance sheet, it's grown a lot, and those DIY direct customer channels are gaining traction.
No doubt about it. They're killing it in the digital game. But let's not forget about the human factor, okay? Their management team, they've got tons of experience, which is super important when you're making big decisions about your digital strategy.
Right, you can have all the fanciest tech in the world, but you need the right people at the helm to make sure it's being used effectively.
Exactly. And their board of directors, they're impressive too.
Hmm.
They come from all sorts of backgrounds, finance, tech, even agriculture and rural development. It's a well-rounded group, you
Yeah.
know. They can offer all sorts of insights and guidance, which is super valuable when you're navigating the world of Indian banking.
So we've talked a lot about the good stuff, but no bank is perfect, right? What are some things we should be watching out for? What are the potential red flags?
Well, those non-performing assets, they did creep up a bit this quarter, particularly in the consumer banking area. We got to keep an eye on that and see if it's just a temporary thing or a sign of something more serious.
And their net interest margin, it's been shrinking a little, partly because of those lower yielding livelihood loans.
It's a trade-off, right? They're serving a really important customer segment, but it might affect their overall profitability.
And even though they're doing great on capital right now, if they keep growing like this, they'll have to manage it super carefully. Might even need to raise some more capital down the line.
Those are all valid points. But honestly, overall, I'm impressed with how IndusInd is doing solid foundation, clear vision for the future, and they're embracing innovation.
I agree. They're definitely one to watch.
Yeah.
It'll be fun to see how they evolve in the next few quarters, next few years even.
Before we jump to the last part of our deep dive here, something in their investor presentation really stood out to me. Their commitment to ESG.
Oh yeah, that's a big one. They're putting a lot of effort into those environmental, social, and governance factors. Won a bunch of awards for their sustainability initiatives and their employee volunteering program. That's pretty cool too.
It's refreshing, you know, to see a bank really prioritizing ESG, making it part of how they do business, not just an afterthought.
And it's not just about being nice, right? Investors and customers these days, they care about this stuff. They want to support companies that are doing the right thing.
Absolutely. And those who ignore ESG, well, they might regret it down the road.
So everyone listening, we've covered a ton of ground here. IndusInd's strengths, their weaknesses, what they're planning for the future, even their ESG efforts. But before we move on to the final part of our deep dive, I want to ask you a question. What do you think is the most important thing we learned from IndusInd's Q2 performance? Was it their digital transformation? Their focus on bringing financial services to everyone? Their strong capital position? Or something else entirely? Take a moment to think about what really resonated with you. Okay, so we've looked at the big picture, right? But now I kind of want to zoom in a little, get into some of the specifics of how IndusInd Bank's performing.
Yeah, I agree. Those little details, they can be super revealing, you know? We can move beyond just what happened and start figuring out the why.
Exactly. And one thing that really stood out to me was that breakdown of their non-performing assets, the NPAs.
Ah, yeah, the composition of those NPAs, that tells us a lot more than just the overall percentage.
Right. We know those overall NPAs are pretty low, but when you look closer, there's some interesting variations within their different portfolios.
Okay, let's hear it. What did you see?
Well, their vehicle financing, for example.
Yeah.
We know that's a big strength for them, right? And their NPA percentage in that area is super low, which makes me feel pretty good considering how much they lend for vehicles.
Yeah, that suggests they really know what they're doing when it comes to managing risk in that market. All those years of experience, it's definitely paying off.
But then you look at their microfinance business, BFIL, and their NPAs are a bit higher there, which, I mean, makes sense to me, right? Microfinance, you're lending to people who might not have a lot of credit history.
It's a different ball game, for sure, higher risk. But IndusInd, they seem to be handling it well. They wouldn't be the second biggest microfinance lender in India if they weren't good at this.
Right, and it's not just about experience, is it? They're using technology to get better at managing risk, too. Remember they talked about those tech-driven systems they use and how they monitor things at the branch level for microfinance?
Smart move. They're combining that on-the-ground knowledge with all the data they're collecting. It's like making smarter lending decisions, both for the bank and for the people borrowing. Shows they're committed to financial inclusion, but also doing it responsibly.
So even though microfinance might come with slightly higher NPAs, the impact it has, helping people in communities, that can outweigh those risks.
Yeah, it's all about finding that balance, right? Risk versus reward. And with microfinance, the rewards, they can be huge, empowering people, making a real difference.
All right, let's switch gears a bit. I noticed some interesting stuff in their breakdown of loans by sector, too, specifically within their corporate banking. It's a pretty diverse mix, which is Good, right?
Diversification, that's key for any bank. It means they're not too exposed to any one industry, helps protect them if one sector starts struggling.
Right, but even with a diverse portfolio, some sectors are always going to be doing better than others.
Yeah.
So I'm curious, what do you think about a few specific areas?
Happy to share my thoughts. What sectors are you thinking about?
Well, their exposure to real estate caught my eye, especially commercial and residential. It's a big chunk of their loans. And real estate, it can be up and down, right? Sensitive to interest rates, how the economy's doing, all that.
Good point. Definitely something to keep an eye on. If the real estate market takes a hit, that could trickle down to IndusInd.
And they've also got a decent amount of loans going to NBFCs, those non-banking financial companies. That sector's had a rough time lately.
Yeah, it has. But it's also got huge potential for growth. The key for IndusInd is to be careful, stick with those NBFCs that have good ratings, a history of solid performance.
So it's like knowing each sector really well, what the risks and opportunities are, and then adjusting their lending strategy to match.
Exactly. And that's what I love about digging into bank results. It gives you this glimpse into how the whole economy is doing, different industries, everything.
It's like a whole financial ecosystem, right? Everything's connected, impacts each other.
Before we finish up here, I want to highlight one more thing that makes me feel good about IndusInd's approach to risk.
Okay, tell me.
Remember those contingent provisions, the ones that probably contributed to that profit dip? Well, setting that money aside, it shows they're thinking long term, getting ready for whatever might happen.
Like they're saying, hey, we know there might be some rough patches ahead, but we're prepared.
Right. Not just crossing their fingers and hoping for the best. That kind of careful planning, it's a sign of a well-managed bank.
Well, I think we've covered it all, haven't we? IndusInd's Q2, we looked at their strengths, their challenges, where they're headed. Uncovered some pretty interesting insights along the way.
We definitely went beyond just the headlines, got into the nitty-gritty, the real story behind the numbers.
And hopefully everyone listening, we give you something to think about. What's your take on IndusInd now? Do you think they're going to keep doing well, or are you a little hesitant considering some of the things we discussed?
No right or wrong answer here. What matters is that you've got a better understanding of how they operate, their strategy, what's influencing their performance.
And remember, finance, it's always changing. New things popping up all the time. So keep learning, do your own research, stay in the loop. That's the best way to make sense of it all.
Well said. And on that note, I think we've reached the end of our deep dive.
Thanks for joining us. We'll be back soon with another deep dive into, well, who knows what exciting corner of the financial world. Until then, happy investing.